In this video, I'm going to talk to you about the 2020 stock market crash, what that means, what it looks like for you, and some of the things you can be thinking about when a stock market does crash. I'm going to be doing quite a few more videos on the stock market in the next few weeks because I think that we need this information now. Even if we're not acting now, I want you guys to be prepared if you do decide to get into the market. I don't want you to miss the boat. So if that's interesting to you, please do subscribe and click the bell icon. That's going to notify you right when I drop a video so you can watch it straight away and be on top of it and follow us along for the journey. Little disclaimer, I'm not licensed to give financial advice, so if you are planning on investing, please seek professional advice before you do so. Just before I continue, pause this video, let me know in the comment section down below if you're considering investing in the stock market right now and if that's why you're watching this video at the moment. All right, let's get into it. Fundamentally, when a stock market crashes, it's a really sad time because the reality is people have lost their hard-earned money that they've invested in the stock market. I reckon there are two really important things to be thinking about when a stock market does crash. Number one, if you're currently invested in the market, it's really important to determine how far you think the market has crashed compared to how far you think the market will crash, and whether it's important to get your money out of the market before the losses become really significant, or whether it's better to just ride out the storm and wait till it recovers enough. And the second thing to think about is, could this be an opportunity to buy fallen stocks that we think will recover in the long term? Now, this can apply to people who are already in the market, but it can also apply to people who are looking to invest in the market that don't currently have money in the market. When a market does drop really significantly, and especially really quickly, it can present as a great opportunity to buy some stocks that you've been eyeing off for a long time at effectively what I would consider to be just a discounted rate. It's kind of like buying a new TV. Maybe it's too expensive right now, or maybe it's just not the right time for you to buy a TV. But if the price suddenly drops really dramatically, maybe you're in the ballpark now. Maybe it's time to start looking at that TV. You can get it at a really good price, and especially if you expected it to go up in the future, you might as well get it at the low price rather than waiting till it goes back to its old price and potentially even more expensive than it was before the discount. That's exactly how you want to think about the stock market. What is on discount right now that I can buy at a rate that I won't see again for many, many years or ever? And I think that if I don't buy it, I'm going to miss the opportunity when it goes back to the price it was previously at, or even beyond. One really important thing that's easy to overlook, particularly for a beginner who may not have thought of this before, is if a price on a stock drops from $100 to $50, that price has dropped 50%. Now, if that price goes back up to 100, it doesn't go up 50%. That would be $75. It actually goes up 100%. So if you wait for that stock to go down from $100 to $50 and then buy it on that 50% discount, and then you wait for it to go from 50 to 100 and sell it, you make 100% return on investment. Now, that sounds all good and well, but the reality is, just because a stock drops in price, even dramatically, doesn't mean that it's going to go back to where it was. Sometimes companies crash and go completely bust. So it's really important to remember, just because a price drops does not mean that it will rebound. Now, that is exactly where some of the risk lies in buying stocks, but it also is exactly where the opportunities present for the really clever and experienced investors. If you believe that a company is very solid and most likely going to rebound and get back to where it was before the crash, or even go beyond that in the long term, that is a worthwhile investment. In times of such uncertainty and unpredictability, we want to be able to bank on a really safe bet. And while there are no safe bets, there are companies that we can look at objectively and assess, I think they're strong enough to get through this. So we need to take in a variety of factors to see where a company in particular or a sector is going from here. Now, another really important factor when you're investing in shares, especially for a time right now where we're in a recession, is we don't know what the market's going to do. We don't know if it's going to continue to drop, and potentially really severely. And it can also stay down for a really long time. Recessions behave very differently to any other period of time. So we need to make sure that we're investing for the right reasons. And in my opinion, if you're looking to make a quick buck, invest now, sell in 2 or 3 months, make some big money, then invest again and make some big money in another few months, you're probably investing for the wrong reasons, in my opinion. I would be advising you to be willing to part with your money for a long period of time, potentially 1 or 2 years, 5 or 10 years, or maybe even it's part of your retirement plan and you keep those stocks for 20, 30, 40, or 50 years. The people that do trade like that really frantically throughout the day, they're the people who are dedicating all of their time to focusing on the stock market. They're researching all different markets, all the factors, listening to all the information, reading all the articles, and not everybody, and particularly people who are just getting into the market, probably don't even know where to get that sort of information, and definitely are unlikely to have the time to dedicate to get the information that they need. Now, just before we wrap this video up, I want to get one more point across to you that's really, really important. And that is to please remember that there are no guarantees in the stock market. And that is why investing in stocks is fundamentally risky. Take this global economic climate right now as a perfect example. Who saw this coming? Sure, the market's been in a little bit of a funny place for a little while now, but really, who expected the coronavirus to shut down the universe? Probably an exaggeration, just the world will do. But who expected the world to be on lockdown right now? So many companies closed, can't afford to pay their staff, can't afford to keep their doors open, making way less sales, making way less profits. Who saw that coming? Sometimes you can do all the homework, all the research, get all your ducks in a row, everything perfect, and still get it wrong. That is completely possible, and it happens to the best investors in the world. No one can perfectly predict the market, and if they could, there would be a lot more billionaires out there, let me tell you. And we do not know what the market's going to do in a recession. We don't know how long it's going to last. We don't know how long people are going to struggle. We don't know how it's going to react when people start going back to work. Maybe the market booms straight away. But also, lots of people have just been without work and without pay for months and months and months. They're struggling to pay off their loans, their car loans, their home loans, paying their bills, paying their rent. There are so many factors. So maybe they can't just go out and spend all their money. That's another thing to consider. All I'm trying to say is please do some homework, speak to professionals, do your own private research, see if this is something that is really on the cards for you, because at the end of the day, you want to make the most educated decision that you can when you're talking about your hard-earned money. So please, don't take that decision lightly. Really be careful with your money and do the necessary groundwork that you need to make the best decision for your financial situation. All right, everyone, that's going to wrap this up. Thank you so much for joining me. I appreciate it so much. I really hope you got value out of this video, and if you did, make sure you like this video, and please comment down below if there's things that I said that were really helpful, and also let me know if there were some things I missed or things that I hadn't thought about that you've thought about. Whatever it is, I love discussing things with you in the comments, and I love seeing how I'm helping you, so please don't be shy, comment down below. My next video is going to be about the things that you actually need to be prepared to buy stocks. So if you are considering buying stocks, that video is going to be really helpful to you to know what it is that you need to get all your ducks in a row to be ready to invest in stocks. So look out for that video on Sunday. Until then, I'm Dan, and you've been Dansplained. See ya!